Payroll. Probably most of you have gotten a payroll check in your life. If not, you probably will in the future. So this is something that should probably make some sense, and if not, you should probably learn a little bit about it so you know what's going on when you get that paycheck stub and you see all these things that come out of your check. You thought you were going to get, say $15 an hour, but you didn't get paid $15 an hour. What happened? Well, what happens is we have to take some things out. So we're going to talk about how we calculate payroll and some of the items that are accounted for and taken out of your check as an employee, and also things that the employer is responsible for. So first, let's talk about the payroll check itself and some things to look for. That $15 I told you, that would be a gross amount. Gross wages or gross salary. The difference between wage and salary is wage is usually an hourly amount and paid on and the amount of hours. Salary is a quoted annual or monthly figure, and it doesn't matter your hour amount, you get paid a flat amount. So most salary also do not get overtime. Wage usually does. So that's the top part. That's where we start from. But then we're required to take out some things on both federal and state, and sometimes even at a local level. You'll have federal income tax withholdings taken out of your check that are sent to the federal government. You'll have, if your state does state income tax, Georgia does, you'll have state income tax withholding taken out of your check. You'll also have, as part of federal requirements, Social Security and Medicare that comes out of your check. Now, a lot of times these will be combined into one line, and it will be called Fica taxes, F-I-C-A, Fica taxes. So those things are your basic. Now, you could have a lot of other things that come out of your check. Maybe you make charitable donations that your company takes out of your check directly and sends on to those companies. Maybe you have a direct transfer to your savings account that comes out of your paycheck. Maybe you have retirement funds. Maybe you have health insurance. A lot of different options that you can have that come out of your check. Again, some are required, some are optional. But we're just going to go with the basics. All of those items are things the employee is responsible for. But the employer is also responsible for items. They do pay your paycheck, so what we call the net amount. If we take the gross, the top figure, that $15 an hour times however many hours you worked, we take out all those deductions. What's left is called net pay. That net pay, the employer is responsible for paying as far as the cash goes. But those items that came out are the employee's responsibility. That's why we take them out of your check and hold them and then send them to the appropriate agency if I'm the employer. The employer, however, is also responsible for some items out of their own pocket, not out of your check. Two of the items you'll also see in your check, though. Social Security and Medicare, or simply stated as one line called FICA, the employer has to match 100%. Now, there was a short period of time where they actually got to pay a smaller percentage, but it's back to where they match the same amount that comes out of your check. The employer has to pay out of their pocket into the federal government as well. Then there are two additional items that are based on your gross wages, but you don't have to pay them. They don't come out of your check, but your employer has to pay them based on the gross wages. And that's federal unemployment taxes and state unemployment taxes. Again, it's based on your gross earnings, but you won't see a line coming out of your check for it. But the employer has to pay for it out of their own pocket, so to speak. So let's run through some numbers with payroll. Let's assume that we have, this is a weekly payroll. Write a few things down. And let's say that we have 240 regular hours for all the employees for this week's payroll. And we have 32 hours overtime. And we pay overtime at time and a half. Okay? And overtime is regulated, mandated, however you want to state it, at 40 hours a week. So anything over 40 hours is considered overtime. And again, we're going to do time and a half. You could pay, twice as much, or time and a half is what we're going to do for our example. So we've got our hours here, and let's assume that we pay $15 an hour like we had discussed before. And that's our pay rate. So to start off with, again, we would begin by taking out, or by calculating our gross wages. So the regular hours, we had 240 of those at $15 a piece. That comes to $3,600. Then we had some overtime hours. We had 32 of those, and we pay time and a half. Well, time and a half would mean our regular's 15, so time and a half would be $22.50 per hour. So that's going to be a total of $720. So our gross wages are $43.20. So this is the top figure where we start. Then we have to talk about deductions. What's going to come out of the payroll checks? Well, we're just going to go ahead and give you the federal and state income tax withholdings. Not going to make you pull withholding tables or do those calculations. We could talk about payroll for an entire class for payroll tax accounting. There are a lot of nuance and detail and in and outs of payroll taxes. So we're just going to give you that we had federal income tax withholding and we also had state income tax withholding. The federal, let's assume, was $880 and the state $130. Now, we've got two other items that we're going to take out of these paychecks. And one would be Social Security, the other is Medicare. Now again, you can combine these two, and if so, this would be called Fica, if we put both of them together. Now, in the real world, Social Security is 6.2% of gross wages, and Medicare is 1.45% of gross wages. So overall, FICA taxes would be 7.65% of your gross wage or salary. So for this example, Social Security at 6.2% would come to and I'll round, $268, and Medicare at 1.45% would come to $63. Again, I could combine those and just write FICA to the side, and it would just be the addition of those two lines. That's all we're going to take out. We're not going to do any extra things. Now, also to know, again, for a real-world setting, Social Security has a maximum cap. What we mean by that is if you make over a certain amount of money, you don't have to pay any more Social Security. So Social Security is taxed up to a certain point. And let's assume it changes, it's inflation adjusted, but I'll just say $105,000. So if you make up to $105,000, all that's taxed at 6.2%, but anything over $105,000 is not taxed for Social Security. Medicare is always taxed. It doesn't have a cap on Medicare. So these are our deductions. We're going to subtract that from our gross wages. And so our net pay is $29.79. That's the amount that we're going to actually write the payroll check for. Okay, so let's make our journal entry to reflect the weekly payroll. Our first thing we dealt with were gross wages, and so that's the first thing we're going to put in here. And it was a wage, so I'm just going to use wages expense. That's an expense for the company, the amount of that gross. Because if we didn't have any regulations, government requirements to take things out of paychecks, then that would be the amount I would really pay you. Then it would be easy. It would be wages, expense, and cash. But we have all those other things that come out. So our wages expense was that $43.20, the gross amount. Doesn't quite look like a 4, but that's what it's supposed to be. And then we had all those deductions. So we had the federal income tax withholding. So I'm just going to shortcut and put federal withholding. And this is a payable account. It's a liability because all I'm doing is taking that $880 out of your check and sending it to the federal government. All right, the same thing with the state income tax withholding. I'm going to take that $130 out of your check, I'm going to hold it, and then I'm going to send it into the state agency. Social Security and Medicare, same way. Again, or you could just have FICA. You could have one line here. I'm taking those out of your check, I'm holding them, and then I'm sending them in to the federal government. So there we go. Now, I haven't balanced my journal entry, so I'm not done. And why am I not done? Well, because I haven't paid you yet. This is the gross amount. These are the things I took out of your check, and I'm going to send to somebody else. But now you might want to get paid. But let's say I'm just running the payroll, and I haven't actually cut the checks. If that were the case, I'm going to use wages payable to show that I now owe the net amount of $29.79. When I actually pay them, then I'll debit this account and credit cash. Or if I did it all at the same time, instead of using wages payable, I would simply use cash here and write the payroll checks out. Now this is what the employee is responsible for. Now let's deal with what the employer is responsible for. I told you that two things that come out of your check, the employer is going to have to match. And that's going to be these two, Social Security and Medicare. So these same amounts your employer is going to have to pay. Withholdings are all you. The employer doesn't have anything to do with those except for taking them and sending them on out of your check. So Social Security and Medicare are going to have to be paid from your employer as well, matched the same amounts. And then the employer also has to deal with those unemployment taxes. So let's get a new page here and make their entry up. So let's look at what we're considering. We've got Social Security, and that was $268. We had Medicare, and that was $63. Those things we saw out of the check. But there were two other items we talked about that the employer is responsible for. One is federal unemployment taxes and one state unemployment taxes. So I shortcut that with something called FUTA and SUTA. When I was practicing in public accounting, I don't know why, but when I started out, it was just funny to see this FUTA and SUTA all the time. So I just started calling it FUTA, SUTA, BUTA. So there you just funny little story for you. But Federal Unemployment Tax Administration, or Tax Act when this came in, and State Unemployment Tax Act, FUTA and SUTA. Federal unemployment taxes and state, again, are calculated on the gross wages. But they have caps or limits, similar to what we talked about with Social Security. So once an employee makes a certain amount of gross wages, your employer no longer has to pay in unemployment taxes for that employee for that year. Now that starts new every year, and Social Security does the same thing. So there's a certain amount. So it's the first 7,000 of gross earnings per employee per year for the federal government, and for the state it's different. For Georgia, it is $8,500, the first $8,500 of per employee per year. So you would need to keep a cumulative total of your employees' earnings to calculate these amounts. So for federal, it's actually 0.8% is going to be calculated. For the state, it will vary not only by state, but also by company, because it depends on your employment record and how many people have, it depends on your hire and fire record and your unemployment record with the unemployment agency in the state, how many people might have tried to claim unemployment and those types of things. So let's assume for our purposes that the FUTA is the same, it's 0.8%. And the SUTA, let's do 3.2%. Oh, not 32, 3.2. That would be a really high rate. So these are again calculated on gross wages. This doesn't come out of the employee's check. This is only the employer's responsibility, but it is based on that. And let's say that when we figure out everyone we're paying and their gross wages for the year, that $2,000 out of that gross wages is applicable for both FUTA and SUTA. So that's the amount we're going to use to multiply by the 0.8% and the 3.2%. So for FUTA, that would come to $16, and for SUTA, that would be $64. So those are the items the employer is responsible for. So these are all also an expense of the company for having employees. So when we make our journal entry up, we're going to use an account called Payroll Tax Expense. And we're going to add all four of those up. So if we go up here and add all four of these items, it's going to come to $411. So that's the amount of our payroll tax expense. This is the employer portion. So we had Social Security in there, and that again, these are just liability accounts. We owe them. We haven't sent them to the governmental agencies yet. We had Medicare payable. We now have that federal unemployment taxes payable and state unemployment taxes payable. Okay, so again, just refresh, look at our numbers. We're going to use those again down here. We're going to credit and increase those liability accounts by this much. So Social Security we had $268, Medicare was $63, federal $16, and state $64. This is also something that I try to let students know about when we talk about it. If you ever plan on having your own business, please make sure you take this into consideration. It's not just paying your employees. You have to pay things out of pocket based on those wages as well. And you'll have to make quarterly filings sometimes monthly filings, and some different types of annual filings also because of the employees and the payroll itself. So there's a lot more involved with it than just, hey, I pay them, X amount of dollars each week. A lot more is involved with payroll.